Good morning, everybody. This is Market Michael here, back with some news. Alright, this is what we're going to cover today, ladies and gents. We got some economic data coming up at 8:30. Let me try and get in here. There we go. Great. Hey guys, how's it going? Economic data coming up. We got initial claims, continuing claims, and Philadelphia Fed. All were medium level indicators at 8:30. Whoops, 8:30. And there at 10:30 we got leading indicators and then nat gas invents. Not sure what they are expected to be, but okay. Now I wanted to mention some things this morning because I made a big video covering the beige book, covering the futures, covering everything pretty much last night. But the thing was, it wasn't, it just wasn't up to par. So I decided to leave it how it was and forget about it. So that's what I did. I forgot about it. And, it's not like it made any difference. So you guys just hang in there. Keep hanging in there. Keep hanging in. Hold on. So I'm pretty sure you can still hear me, guys. What I really wanted to mention yesterday was an interview with a Goldman Sachs CEO Lloyd or whatever the fuck his name is. You know, the guy says some interesting things that we should mention. So I'm gonna just get into it, guys. So China, basically, well, he asks about, the question wasn't even about tariffs or wasn't about this, but this is what I got from the question. He basically said the truth, and he said China had the guts of, that America once had. America once had the guts of the world, and that's how we became so rich, because we did successful trade. We built the world's goods. But now China builds the world's goods. They stole our economy. They stole the guts of our economy, and they import cheap goods to the world. Now, we buy those cheap goods with dollars. So that's major league. Major league, that's affecting our GDP. He said it's affecting, our economy and political whatever. So that's where we're at. Now, he also talked about something called normalization, and what that means is a cutting off of the medicine, cutting off QE, cutting off cheap money, 0% interest, 0% APR, cutting that to zero, or cutting it back and starting to make people pay. That is normalization. But we don't see normalization. We took a look at normalization. We didn't even think about it. The Fed still is buying bonds. The Fed is getting buyers to buy the bonds. We're not really hitting normalization, and yet the market's down major league. The market can't recover. It literally can't recover and catch its breath. If you look at the freaking Dow, it's been lower lows ever since we had that not even 10%. It was like a couple percent correction. Not even a correction. We just had major league drops of volatility. So, literally, guys, what else did I write? It cannot happen without the pain. It barely took steps to do so, yet we're in a bear market. So pretty much exactly everything I just said. Interesting, guys, right? Very, very interesting. Well, that's that. It's 7:41. These futures are not looking hot. You see here this Dow with this MACD completely going down. So, either what could happen, this was my original hypothesis, is that we would go down, get support, and then come back up. But I'm not sure what's going to happen. I'm not sure. This part, I don't know. I told you guys 5 days ago that I don't know what I said 5 days ago. I know I've been mentioning that there's a pivot point coming, and I guessed you guys that it would be around the 78%, around this, 50% fib, and this. I'm not really sure what I said for the. This is the futures, guys, but I said that the resistance would come in here. I said we'd pop above this 61, and that was it. Once we popped above this 61, I said, dude, we're getting a doji for a fact. Guess what? We got dojis. Guess what? We're coming down. Pivot point. So, but it depends on how much it comes down. If we get, if we, this could either reset, and continue to move higher, or this could actually be, you know, the end of this little bull run. Right now, this is 40. Yeah, this has got to be the end, unless it's going to be super strong, because we got a 40 on the MACD. So if that's a 40, we're going to get like a 50, a 60 on the MACD for negative. That's kind of crazy. We came up a lot from this 6400 level, 400 points on the futures, but listen, guys, it could do one of these, do a double, but I don't think so. We haven't even gotten up, and I called this out, like that. I'm pretty sure it's just gonna be a one mover, because we've already spiked up a lot, and we're just going to fade off into a negative MACD move, which is going to pull us down, which is going to make us lower lows. I've been telling you guys this information for days now, so this should be nothing new to you. With that being said, it's 7:44. I'm gonna go make a cup of coffee again, and I don't expect there to be much movers today. We are looking, pretty dead, guys. Pretty dead. This is kind of sad, but it's good, because because just like in a forest fire, it's sad, the animals die, but what happens in a forest fire is that carbon is put into the ground, and that is a element that's needed in the NPK, or not NPK. It's there's a cycle in biology that it has. There's things called like like not base elements, but like essential elements. It's like probably carbon, carbon, probably oxygen, and hydrogen. That those are probably the base elements. But anyway, it needs those, so it needs to reset, and that's basically all this market's doing right now. It's resetting. It's going to come down. I don't think it's going to come down. It's not going to be like a year of going down. Now, what could happen is that like in '01, we had just drop-offs. Just the selling was a selling spree. But now we have in place limits to how much percent we can go down or up. Halts, they're called circuit breakers. So if we go down, it depends on when they trade. So pre-market or early morning or something is different than whatever, but I think I'm going to give you an average. It's around 10%. But I know for pre-market it's much less, and it's not even pre-market. It goes into the trading morning. So because they know what they're doing. But anyway, so they could stop the market from killing itself. But what's going to happen, I think, it's just going to be in limbo and then just trend down. It's can't recover from that. So, but at the same point, halts, circuit breakers do work with stocks for the most part. If it's going up and they're trying to stop it from going up and they halt it, it's going right down after that halt, or it's going to continue to go up. But this is the market we're talking about, and this is economics. This is the future of the country. This is the future of the world we're talking about. And all the traders know, all the insiders know that we cannot normalize, and that this has gotten crazy, this is ludicrous, and this needs to be stopped. This needs to be this is a scam to the people, to the world. We need to get our infrastructure back. We need to start building the economy back. We need to start having jobs that actually mean something. And that's how we do it. And how we get there is by reduced regulations, reduced spending. We have to cut our spending. We have to, you know, we can't be the policeman of the world. We have to cut spending. We have to get our balance sheet in check. Once we get that balance sheet in check, it's just a matter of years until it stabilizes and until, we start to make some progress and pay off this debt. So once we start paying off the debt, it's going to be easier and easier, and at that point we're going to be able to start growing slowly and slowly. So we fucked up Major League by, and a lot. Even though China did this too, they have they have gold, they have real assets, so they could, I guess, default and keep all their gold. You know what I'm saying? But we have nothing. We don't even have gold. So at least, at least, you know, they can do something. But we need to just pay off this balance sheet. So we just got to cut the regulations, guys. We need to, and by cutting regulations, I mean like regulations that just hinder business, because I'm all for regulations in cases where consumers might get fucked up or fucked over. In certain circumstances, the regulations are necessary, and that's what we're looking for. So if we cut regulations, I'm pretty unfortunately sure we have to raise taxes to pay off the debt. And we also have to, we have to make it so the people of America can work in these facilities, meaning like we set it up so in high school they're learning about these trades. They're becoming these expert welders or these expert manufacturers. you know and pay them good money too, because we got good products that are gonna last. Unlike the Chinese goods last for a year, and then they're shot. American goods, you ever notice this, guys? You buy an American good and it's just like, oh, the quality control, the freaking quality is off the hook. You get some Chinese parts, it's junk. You know, that's Trump's always saying, oh, they're dumping, cheap Chinese steel on the market that sucks. Well, I mean, oh yeah, no shit, you can get good Chinese steel, but what they're dumping on the market's probably garbage. Got lots of carbon in it and it's impure. Anyway, I'm going to have to end the video here. That was just a rant about, you know, about some real things we could do to fix what's going on. Not really important, but, it has to do with this Goldman Sachs guy. It has to do with China. It has to do with normalization. So we're wrapping this all together, and makes a lot of sense. These Keynesians are reckless and out of control and are going to destroy this country if you Americans don't stand up for your freedoms and don't stand up for what the founding fathers fought for. This country is going to get worse and worse and turn into a shithole. Third world country. Here we come. We're going to turn into China 2.0. China before we've got the fucking before they got the economic growth. So, their GDP is off the hook because they're just printing, and but our GDP is flat and we have no growth. The Fed, the beige book, basically, the biggest thing I could tell you is that they said the economy's sluggish. And when the economy's sluggish, it means money velocity is going down. When money velocity is going down, it means money isn't getting to where it needs to go in the economy. It means people are paying off their debts rather than going and spending. It means, but they can't even pay off their debts. A lot of people are trying to, but some people aren't. But the fact of the matter is that money isn't recirculating and isn't going to the uh, you're not buying a new house. You're not buying a new single family house. You're not getting contractors. You're not fixing the windows. You're not doing the tiles. You're not, doing your car. You're fixing your car. You're not. You're letting it all fucking go. And that money that those people would go and spend it on food. They would spend it on this. They'd spend it on that. And it would just keep going. You know what I'm saying? So the fact that it's sluggish and this is happening is indications, and those are just the indications that they're blatantly telling you. That's not indications that we've been looking at, like the curve inversion, the yield inversion, but yet they rebuke that because we are at zero pretty much anyway. So it's more likely for the curve to invert, but there's plenty other things. I think the 2-year and uh, the S&P yield, when that inverts, we also get a recession, and it inverted recently. I saw that on Bloomberg. I mean, listen, guys, we could go on and on about the indicators. I talk about them when they come up, but I'll tell you guys this, that that something's got to be done, and that's the end of the story. Well, this video's gotten way too freaking long, but I hope you enjoy it. It's got a lot of good content, and I'll see you about 8:30. All right, guys? See you later.